You've been investing for years, but do you actually know how much of your return you're legally allowed to keep? Most Indonesian investors have no idea. They look at yield, they look at return, they never look at the tax. Today, we fix that. Every major investment instrument, every tax rule, exactly what you keep after the government takes its share. When you're 25 and investing, tax is an afterthought. You have decades to recover. You're optimizing for growth. But when you're 49, with maybe 8 to 10 years before retirement, tax efficiency becomes one of the most powerful tools you have. Think about it this way. If two instruments both return 8% per year, but one costs you 10% in tax and the other costs you nothing, the tax-free one outperforms by the equivalent of nearly a full percentage point per year. Over 10 years, that gap compounds into a significant difference in your final portfolio value. We're going to compare 4 categories today: Indonesian stocks, Reksa Dana, 3 types, government bonds, ORI and SBN, and US ETFs like SCHD and QQQM. For each one, the return profile, the legal tax treatment under Indonesian law, and what you actually keep. This is not general advice. This is the law. Let's go. The first instrument: individual Indonesian stocks listed on IDX. When you buy and sell shares on IDX, there are 2 types of return: capital gain from price appreciation and dividends. Let's talk tax on each. Capital gain. In Indonesia, capital gain from selling shares is not taxed on the profit. It's taxed on the transaction itself. Based on government regulation PP number 14 of 1997, every time you sell shares on IDX, you pay a final income tax of 0.1% of the gross transaction value, not the gain, the total sale value. This is automatically deducted by the broker. You never have to calculate it. Example: you sell 100 million rupiah worth of BBCA shares. Tax equals 100,000 rupiah. That's it. Whether you made a 50 million rupiah profit or broke even, the tax is the same, 0.1%. Dividends. This is where it gets more nuanced, and where many investors get it wrong. Before 2021, dividends received by individual Indonesian taxpayers were subject to 10% final income tax, withheld at source by the company. After UU-HPP number 7 of 2021 and further clarified by PMK number 81 of 2024, the rules changed. Dividends are now potentially exempt from the 10% PPH final. But 3 conditions must all be met simultaneously. 1. The dividend must be reinvested in Indonesia. 2. The investment must be held for at least 3 tax years. 3. You must report the realization of that investment every year through the core tax system, no later than 3 months after the tax year ends. If all 3 conditions are met, 0 tax on dividends. If you fail even one condition, 10% final tax applies retroactively. The key word is administrative discipline. The exemption is yours to claim, but only if you file correctly, every year for 3 consecutive years. The second instrument, Reksa Dana. And here I want to separate 3 types, because their return profiles and risk levels are completely different, even though their tax treatment is the same. The tax treatment first. Under Government Regulation PP number 55 of 2022, income received by individual retail investors from Reksa Dana, whether from capital gains, dividends inside the fund, or interest, is generally not subject to personal income tax at the investor level. The fund itself handles any tax obligations internally on certain instruments it holds. But what flows out to you as an individual investor is effectively tax-free. This makes Reksa Dana one of the most tax-efficient investment vehicles available to Indonesian retail investors. Now the three types. Reksa Dana Saham, equity mutual funds. These invest primarily in IDX-listed stocks. Historical return, 8 to 12% per year on average, though highly variable. The fund manager does the stock picking. You own a diversified basket. Tax to you, effectively zero on gains and distributions. Best for long-term capital growth, not immediate income. Reksa Dana Pasar Uang, money market funds. These invest in deposits, short-term government securities, and money market instruments. Return, roughly equivalent to bank deposit rates, currently around 4 to 5% per year. Very stable NAV, almost no volatility. Tax to you, effectively zero. Best for your emergency fund or cash waiting to be deployed. Liquid, low risk, and surprisingly tax efficient compared to putting the same money in a bank deposit, which would be taxed at 20% final withholding. Reksa Dana Pendapatan Tetap, fixed income mutual funds. These invest mainly in Indonesian government and corporate bonds. Historical return, 5 to 7% per year. More volatile than Pasar Uang, but more stable than equity funds. Tax to you, effectively zero at the investor level. Best for medium-term allocation, 3 to 5 year horizon, income-seeking investors who want less volatility than stocks. The critical comparison. If you put money in a bank deposit at 5%, you pay 20% final tax on the interest, keeping 4%. Put the same money in a Reksa Dana Pasar Uang earning 4.5%, you keep all 4.5%. The tax difference alone can make Reksa Dana the smarter choice even at a lower headline yield. Third, Indonesian government retail bonds. ORI, Obligasi Retail Indonesia, and SBN, Surat Berharga Negara, which includes SR, Sukuk Retail, and SBR, Savings Bond Retail. These are issued directly by the Indonesian government. You buy them through official distribution partners, banks, fintechs, licensed brokers. The government pays you a fixed coupon, monthly, directly into your account. The yields in 2025 and 2026 have been attractive. Recent ORI and SR series offered coupon rates between 6.25% and 6.9% per year, paid monthly. Tax treatment. Under Government Regulation PP number 16 of 2009, interest or coupon income from bonds, including government retail bonds, is subject to 10% final income tax, withheld at source by the paying agent. You receive the net amount after tax automatically. No filing required. Clean. So if your ORI coupon is 6.5% per year, after 10% final tax, your net return is 5.85% per year, paid monthly. The comparison against bank deposits, same 10% rate on interest versus ORI coupon, but ORI yields are typically higher than deposit rates, so ORI generally wins on after-tax return. The key constraint. ORI and SR bonds have a minimum holding period. You cannot sell in the secondary market until a specified date, typically 3 to 6 months after issuance. Some series like SBR are completely non-tradable, held to maturity only. Plan accordingly. This is not a liquid instrument. For a late starter building a guaranteed monthly income floor for retirement, ORI and SR are among the most reliable instruments available in Indonesia. Fourth, and the most complex from a tax perspective, US-listed ETFs like SCHD, QQQM, SMH, and VTI. Let me separate two types of return here, dividends and capital gains, because they are taxed completely differently. Dividends from U.S. ETFs. When a U.S. ETF pays a dividend to a non-U.S. investor, the United States withholds a portion as tax at source. The standard U.S. withholding rate for dividends paid to foreign investors is 30%. However, Indonesia has a tax treaty with the United States. The Persetujuan Penghindaran Pajak Berganda, or P3B, between Indonesia and the U.S. limits the dividend withholding rate to 15% for portfolio investors. To benefit from this reduced rate, you must submit a W-8BEN form to your broker declaring your Indonesian tax residency. So, SCHD pays a 3.7% annual dividend. After 15% withholding, you net approximately 3.14%. After 30% withholding without the treaty benefit, you'd net only 2.59%. Filing the W-8BEN is not optional if you want the treaty rate. Make sure your broker has it on file. Capital gains from U.S. ETFs. When you sell a U.S. ETF at a profit, the United States generally does not impose capital gains tax on non-resident alien investors for portfolio investments. The gain is not taxed at source in the U.S. But here's what most Indonesian investors ignore. As an Indonesian tax resident, you are required to report all worldwide income in your annual SPT Tahunan, including capital gains from foreign investments. Under UUPPH, these gains are subject to progressive personal income tax rates in Indonesia, from 5% to 35%, depending on your total annual income. In practice, enforcement of this for small retail investors is limited, but legally, if you sell U.S. ETFs at a profit, that gain should be reported and is potentially taxable in Indonesia at your marginal rate. This is the tax reality that no one talks about. U.S. ETFs are not tax-free. They are tax complex. Let's put all four instruments side by side and add one more that most people don't think of as an investment, but the numbers might surprise you. Saham, IDX, capital gain, 0.1% transaction tax on gross sale value. On an 8% gain on 100 million rupiah, you sell 108 million rupiah. Tax equals 108,000 rupiah. Net return, effectively approximately 7.9%. Dividend, 0% if you reinvest and report correctly, 10% final if you don't. Reksa Dana, all types. 8% return times 0% tax equals 8% net. Full stop. This is the most tax-efficient instrument in this comparison. ORI/SBN, 8% coupon times 10% final tax equals 0.8% tax. Net return, 7.2%. US ETF, dividend component, say 4% of the 8%. 15% withholding equals 0.6% tax. Net dividend, 3.4%. Capital gain component, say 4%. 0% in US, but potentially taxable in Indonesia at your marginal rate. Effective net, depends on your tax bracket and compliance, but at minimum 15% on dividends reduces your total return. The winner on pure tax efficiency? Reksa Dana. Zero tax at the investor level, full return retained. Now let's add the real-world dimension, inflation. Because a return that doesn't beat inflation isn't a return. It's a slow loss. Assume you invest 100 million rupiah. Indonesia's average inflation, 4% per year. After 3 years, you need at least 112.5 million rupiah just to hold purchasing power. Reksa Dana at 8% net, year 3 nominal, 125.97 million rupiah. Real value, 112 million rupiah. Real gain, plus 12%. IDX Stocks at 7.9% net. Year 3 nominal, 125.57 million rupiah. Real value, 111.6 million rupiah. Real gain, plus 11.6%. US ETF at 7.4% net. Year 3 nominal, 123.77 million rupiah. Real value, 110 million rupiah. Real gain, plus 10%. ORI at 5.85% net. Monthly coupon total, 17.55 million rupiah. But your 100 million rupiah principal comes back at face value. In real terms 3 years later, that principal is worth only 88.9 million rupiah. ORI protects income, not purchasing power. And the bank deposit? BCA gross rate 2.5% after 20% final tax, net 2% per year. Year 3 nominal, 106.1 million rupiah. Real value, 94.3 million rupiah. Negative 5.7% real return. Your money is shrinking in real terms every year. Now, the one that nobody puts in this comparison. Gold. In June 2023, Antam Gold was 1,057,000 rupiah per gram. 100 million rupiah bought you 94.6 grams. Today, June 2026, Antam Gold is 2,743,000 rupiah per gram. Those same 94.6 grams are now worth 259.5 million rupiah. That's a nominal gain of 159.5% in 3 years. Real value after inflation, 230.7 million rupiah. Real gain, plus 130.7%. No annual tax while you hold it. When you sell through Antam or Pegadaian, PPH 22 of 0.9% applies at point of sale. Liquidity is lower than financial instruments. There's a buy-sell spread. And past performance is past performance. Gold had an exceptional 3 years driven by global uncertainty and a weak rupiah. The point isn't that you should put everything in gold. The point is this: asset allocation matters. Each instrument has a different role, different risk, different tax treatment. The informed investor understands all of them and chooses deliberately. So which instrument should a late starter actually use? The honest answer is, not just one. Each instrument has a specific role in a late starter portfolio. Reksa Dana Pasar Uang, your cash buffer and emergency reserve. Tax efficient, liquid, stable. Park 3 to 6 months of expenses here. ORI and SBN, your guaranteed income floor. Monthly coupon, government-backed, 10% tax at source, and done. For the portion of your retirement income you cannot afford to be uncertain about. Reksa Dana Pendapatan Tetap, your medium-term bridge. If you retire in 5 to 7 years, gradually shift some equity exposure here. Lower volatility than stocks, still tax efficient. Reksa Dana Saham, or IDX Stocks, your growth engine. For the 8 to 10 years before retirement, this is where real wealth accumulation happens. Zero tax on gains if using Reksa Dana. For direct stocks, disciplined dividend reinvestment and core tax reporting. US ETF, your dollar hedge and international diversification. SCHD for dividend income growth. QQQM for technology sector exposure. Small allocation, 10 to 15% of total portfolio. Manage the W-8BEN. Report correctly. Gold, your insurance. A small 5% allocation in physical gold or gold ETF serves as a hedge against inflation and rupiah depreciation. We saw the data. 100 million rupiah in gold 3 years ago is worth 259 million rupiah today. Not a growth instrument, not an income instrument, a store of value for when everything else is under pressure. This is not a complex strategy. It is a complete one. 6 instruments, 6 roles, 1 portfolio built to last. I want to be direct with you before we close. Tax law in Indonesia changes. What I've described today is based on UUHPP number 7 of 2021, PP number 55 of 2022, PMK number 81 of 2024, and PP number 16 of 2009. These are the current rules as of 2026. They can change. Second, this video is educational, not personalized tax advice. Your specific situation, your income level, your tax bracket, your employment status may affect how these rules apply to you. For significant investment decisions, consult a certified tax consultant. Third, the US ETF capital gains reporting obligation is real and often ignored. I'm not advising you to ignore it. I'm telling you it exists so you can make an informed decision. Investing intelligently means understanding not just what you earn, but what you keep. Let's recap what the law actually says. Reksa Dana, the most tax-efficient vehicle for Indonesian retail investors. Zero tax on gains at your level. Saham IDX, 0.1% on gross transaction value for capital gains. Dividends, 0 tax if you reinvest and report correctly for 3 years. ORI and SBN, 10% final tax on coupon, withheld at source. Clean, simple, guaranteed. US ETF, 15% withholding on dividends with W-8BEN. Capital gains, not taxed in the US, but potentially reportable and taxable in Indonesia. 4 instruments, 4 different tax treatments, 1 informed investor. If this video helped you understand your investments differently, subscribe, because V13 is about something that can destroy everything we've built. One unexpected health crisis, without the right insurance structure, can wipe out a decade of investing in a single hospital bill. BPJS versus private insurance, what you actually need, what you're probably overpaying for, and the one coverage gap almost no one knows about. That's next week. I'll see you then.